This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq 100, but S&P 500 futures chart. Apologies for that. But just before I start today's video, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. But let's have a look here at the S&P 500. Yesterday we fell significantly for the third trading session in a row. We ended the day down 1.53%, trading just above that very important area of 1920. Now I actually sent out a sell signal yesterday once we broke below that 200-day EMA. So well done to everyone in my signal team. We're making some nice profit there, approximately 1.5% actually, as we saw when the market was flat yesterday. And this market is starting to look bearish. Now, the problem I have is earnings. Now, throughout this year, I have flipped from favorable to unfavorable. That being my bias towards the stock market. And I feel like right now is the right time to probably switch back to unfavorable. Now, back in October, I was calling for a nice bounce here in the markets, and that's exactly what we've had over the past couple of months since that CPI reading came out on the 13th of October. In fact, we've rallied 15% here in the S&P 500. But the problem is earnings. Earnings are way too high. At this current valuation in the stock market, stocks are just too highly priced. And the dilemma is that we are about to enter into earnings season next month, and there's big expectations that companies are going to downgrade and provide very weak guidance going forward, which will probably mean that earnings have to come down even lower. With that being the case, that would just basically mean that stocks are even more overpriced than what they are now if they were to stay at current valuation. So I believe at some time in Q1 2023, we will most likely go and revisit the lows, probably even break below them. I feel like 3,200 to 3,500 is my target. I feel like once you get there, that will be a fantastic buying opportunity here in the market. That being said, it's very important to keep an eye on the US dollar. If we continue to see a breakdown here, if we take out the swing lows, that will actually help the earnings picture. And that may cause the market to perhaps not fall down to 3,200, and we may fall down to prices anywhere between 3,500 to 3,700. Nevertheless, I still believe that at some point in Q1 2023, so from January all the way through until March, we are likely to see this market give up a lot of the gains that we've seen in the past 3 months, which, this is a typical move that you see in a bear market. It's just a typical bear market rally where you do have these very strong gains, and then typically they're followed by sharp declines, just like we saw back in August. So that's my bias here for the S&P 500. I still believe that we go lower here in the coming days and weeks. I feel like the next 2 weeks are going to be very choppy due to the fact we have the CPI coming out on the 13th. We have the PPI coming out this Friday. And then on the 14th, so the day after we have the CPI inflation reading, we hear from the Fed. And we get their interest rate decision. So that's going to be very volatile for the market. But my more medium to longer term outlook here for the S&P 500 is that we probably do go back down towards the October lows. But I do recognize that if we had softer than expected inflation number next week, then that could potentially cause a nice sharp rally here in the markets where we could go and retarget those highs. But generally speaking, I don't think we break back above those swing highs here seen in the S&P 500 this month.